Hello, boys and girls. How are we doing out there? Doc Severson with you here. Ready, set, live. Today's session is Wednesday, the 12th of August. Right in the middle of summer. How we doing out there? Hey, everybody. How's it going? We have Kay Singh from Carlisle, Pennsylvania. Guys, let us know where you're coming in from today, attending Ready, Set, Live. We got folks from all over the world normally coming in here. We talk about crypto markets. We're going to be talking about the equity markets as well, too. And let's see, what do we got there? D'Souza from New York. Outstanding. Fantastic. Thanks for joining us today. All right, let's get into things today, and I'll let you guys know who else is coming in. Victoria, Texas. Lovely place. All right. We've got the 5 points and the trade of the day today, and I'm going to get you out of here by the bottom of the hour. Does that sound good? We got bonjour. We have Florida from the Billionaire Bit Club. From the Netherlands, fantastic. All right, where else we got coming in from today? Cebus. You know, I heard, Steve, that they were going to call that Flavor Town. Is there any truth to rebranding Columbus? Because, obviously the name's no good anymore, so they're going to call it Flavor Town. Denver, Colorado, Alaska, Palm Coast, Florida. All right, guys, let's get going here. Today's session, this is our live trade of the day. We run this on a weekly basis. Make sure you hit the notify bell right down below there. Make sure you do that. In today's session, the 5 points I'm going to be going over today, I'm going to do a quick equity market review. Just what on earth is going on with this market? I'm going to step into some dangerous water here. How will the election affect the equity markets? Go back 4 years ago and see if anybody could have predicted how that turned out. Not a chance. I'm going to be doing a quick crypto market review, what's working with options, and then I'm going to show you guys a very simple Digitex trade setup that you can do from home. And then we'll get into the trade of the day. Welcome from Greece. Fantastic. So first of all, the equity market review. What's going on with the equity markets? Well, I took these screenshots a few minutes ago, so they may have changed since that point, but we've got the S&P right up against the old all-time highs. And the concern that I have right now with that, not really a concern, but we're running out of gas. So it's coming up to the finish line, like literally running on fumes at this point. Now, also keep in mind that we have this broadening pattern. The broadening pattern means this is generally a bearish pattern, but it just means that we're going to flail away inside of this range as it expands and gets bigger and bigger and bigger. Okay. And so those that understand how to trade volatility will set themselves up very, very well. Understand how to trade volatility, my friends, regardless of what market that you're trading. So I might expect to see, maybe this will turn into a cup with handle. Maybe we'll consolidate here for a little bit before we break out. That is a possibility. Okay, so that's the S&P. Interesting, the Russell. Now, one of the things that I got coached on about the Russell many, many years ago is that it's sort of a canary in a coal mine. Hey, Vaude, welcome for joining. Let us know if you have any rocket stats you want to drop on the channel. That'd be great. So the Russell 2000 is the small cap index, and it's a canary in a coal mine to understand what's on the minds of fund managers. I think we'd all agree that fund managers generally, these are the people that drive mutual funds or whomever else, or maybe the larger hedge funds. They control the lion's share of volume in the markets. And when the Russell 2000 is bullish, when they're risk on the Russell, that's actually a good sign for the markets. So sometimes you have to tune out all the noise and the negativity from what's happening out there and just look at what the price is doing. Always just look at the price is doing and forget about the news, because everybody else is watching the news and sitting on the sidelines. Here's the Qs. Now the Qs have led the market, hardly got a pullback at all. I mean, yeah, that was a pretty decent pullback, but you know, somebody's going to look at this chart somewhere down the road years from now that didn't trade this and say, oh, well, look at that cute little pullback in 2020. That must have been a great opportunity. Yeah, it was pure screaming hell to trade through, right? It was one of the strongest moves in 91 years that we've seen to the downside, right? But the NASDAQ just shrugged it off like it never even happened. And I think we all know why. This is because the economy is changing right under our feet right now. It's this whole notion of stay at home, and people are wondering why companies even need office space anymore. Things like that. Everything is changing around the world as we speak. So without getting too far into that, this is why the NASDAQ has gone ballistic. You're hearing everybody say, this can't continue. But what if it does? What if it does? So right now, the way it's moving in a way that will allow it to move a long way further if it continues this way. So just because it's overbought does not mean anything. Markets that are overbought can become more overbought. If the market truly is changing, if opportunities are changing, then we are way out of whack with supply-demand imbalance. So don't get too hung up on where the Qs are trading, or the NASDAQ, however you trade that, right? So here's the wild card. And nobody's talking about this right now. So this is something I want to drop on you guys, is that this is the TNX, this is the 10-year note. And this represents the interest rate. So 675 means 0.675%, right? So 1 or 10 would mean a 1% interest rate on the 10-year note. Imagine that. 0.675 on a 10-year note. That's like next to nothing. We'll be at zero before long. But what I want you to watch out for here is if this starts to rise. Now, it did rise over the last couple of days, and this shook the market. This absolutely shook the market to its core. Not a crash, but I saw fear for the first time in the intraday tape. So watch out for this, because if interest rates start to rise again, that means that the free money party, the old punch bowl, or this game of musical chairs that we keep on playing is going to be over, and people are going to be dashing into what we call fixed rate instruments. Okay, so they're going to be bailing on the risk and say, okay, we don't have to go through this hunt for yield anymore. We've got this guaranteed yield over here, and we have very strange economy right now. So you're going to see people pile into that sort of stuff. Okay. Onward. Now, I'm treading on thin ice here, but what happens to the equity market after the November election? These are partly my opinions and partly some of the data that I've read about this through the Wall Street Journal. So this is not a political analysis. Your partisan politics bore me, so please don't engage in that here. There are really 3 different outcomes that you should prepare for, I think, in my mind. Maybe more, but 3 come to mind. The first outcome to analyze would be if Orange Man wins the election. So if Trump gets reelected, markets like certainty, which his election would bring, so they would more than likely rally as an initial reaction. Now, after that, it's fair game for anything to happen. But I think the initial reaction, the knee-jerk reaction from there would be, oh, okay, good. We understand what he's all about, for better or for worse, right? That's called certainty, and that's what markets run from. Markets run off of certainty or lack of certainty. But if the Democrats win the Senate, right now the Republicans are the majority party in the Senate. If the Democrats flip that equation, the markets will sell off at first from that uncertainty, because then you'd assume that you'd have the House, you'd have the Senate, and gridlock is something that markets like. Markets like gridlock because nothing happens when there's gridlock. And so therefore the markets don't have to discount anything. Nothing, no legislation gets passed at all when there's gridlock. And this is why markets have been ripping higher. It's gridlock. Nothing gets passed. So there's no change. Markets don't like change. So the Senate is definitely a wild card this year. something that not a whole lot of people are talking about, but something to pay attention to for your own financial future. Now, if Sleepy Joe wins the election, equity markets would immediately sell off. This is the consensus opinion, and there's some actual data behind that. So why would Joe crash market? Why would I say something like that? Boosting taxes on corporate profits would go from 21% now to 28%. That's a big deal, right? So that's going to have a bottom line impact on all these companies. So forward earnings are going to be lower. Markets will immediately discount that fact. Number 2, raising capital gains taxes from 23.8%. So it's like 20% plus 3.8% of, I forget what the fee is called in there. So they'd go from 23.8 to 43.4 for the affluent. So these are capital gains taxes if you sell out of something, right? So what would likely happen is people would say, they would talk to their accountant would say, I think that you ought to sell your extremely profitable Apple position for profits now versus waiting next year or the year after where you're going to be paying 43.4%. It's a no-brainer. So we are going to have tax selling if Joe gets in. So once the transition is made, as long as rates didn't rise appreciably, then markets would recover in 2021 and beyond. So after the election, so I'm talking about in 2021, it's unlikely that regardless of who gets in, we're going to have some, nuclear winter scenario, snow piercer, everybody living on a train kind of thing. So it's, there's just too much liquidity out there. The markets, there is no shortage of money. There's no shortage of money that's out there looking for a place, looking for a yield. Okay, so the third possibility is the election is delayed due to technicalities from the voting process. You can only imagine what those could be, whether it's mail-in or some kind of technology. There's going to be issues and people will complain. They will say it's not fair, we've been wronged. The vote outcome, I would say there's a better than 50% chance that this will happen, that the vote outcome will get delayed, which is not unlike the 2000 election. So if you go back and look at the 2000 election, the election was in the first week of November, and I think it was December 18th before it was finally resolved by the Supreme Court. Right? So the uncertainty of this outcome usually favors the downside. In fact, I'm positive we'd see lower prices if there is no resolution to this, because then uncertainty raises its ugly head again, and markets don't like uncertainty. So we'd see some selling. The 2000 equity markets lost about 8.5% waiting in the outcome. But markets are kind of sitting on top of a very high tightrope at this point. Imagine a very heavy weight being balanced at the top of a tall, skinny pole. And that's kind of where our markets are right now. As long as you're steady, you can still pile on more weight up there. But as soon as you start to get unstable, the whole thing comes down. So we may lose more than 8.5% is what I'm saying. So if we have, bonjour Canada. So if we have something like this happen, expect to see some downside. Now, most of this would be priced in before the election. So if you decide to buy puts the day after the election, good luck with that. Probably going to be paying a fortune for those puts. Okay, so we got through that without anybody having a hissy fit. That's awesome. Thank you. Thank you for keeping the politics out of the chat room. Number 3, let's do a crypto market review, shall we? Okay. So yesterday, this is what I saw. Bitcoin dropped 6% in a day, and now we see Bitcoin crashed as expected. What now? How foreboding, right? So that's all it was, just this little red candle up here. This is just normal volatility. G'day from Melbourne. Welcome aboard. So to me, the top 20 coins look really healthy. They look really good. This has been a fantastic breakout that we've had over the last month or so. Really nice breakout, and we didn't give it all back. I mean, a lot of times in the past, we'd see breakouts and then we just give it all back, right? We'd see a breakout and then we just eat it. But this one is holding steady, and that's good. That's exactly what you want. This is a very constructive, very, very constructive consolidation. And so during this consolidation, we have various altcoins like getting it on, like MKR Maker is like, holy crap, look at that thing today. Right? So we have those. We have Hero. We've been watching Hero, and this is, guys, if you ever want to, I've been talking about this for weeks now in the Omnia service, but if you ever want to know what a cup with handle pattern looks like, this is your cup, this is your handle, the breakout above the neckline here. This is like textbook. This is a textbook breakout, and this is happening to this altcoin because this is in the denominator. So Bitcoin's not screaming to the upside right now. So this is the time. If you've got an altcoin looking for a breakout, this is the time to do it when Bitcoin is just kind of a little bit soft right now. Hey, Rajith, welcome aboard. Okay, here's Ocean Protocol is also one that we've been watching for some time. This was a trade of the day that we had a while back, and it's exploded since that point. You know, just beyond physics. It is beyond physics. So we've waited 2.5 years for this breakout. Be patient with the altcoins while the reference currencies, like whether you're buying them through Ethereum or Bitcoin, are rising. So it's going to be sort of this pass the baton thing. It's like you're going to see top 20 run. And if top 20 is running, hold off on your altcoins. Wait for the top 20 to consolidate. Then when the top 20 consolidates, then you jump onto your altcoins. So that's what's happening right now. Hey, everybody. Welcome aboard. We got Slovenia. We got Hervey Bay, Australia. All right. Great to see everybody coming in from all over the place. Now, number 4, we're going to get you right out of here by the bottom of the hour. What is working in the options market today? There's a strategy. Now, some people call them naked puts. I don't like using that name because, well, apart from the giggles that it usually creates, the actual term for naked puts means that you don't have the margin to accept assignment. And so I like using the term cash secured puts because what it implies is that you've got to have the cash to accept the assignment. So if you don't know what these are, I'll try to explain this in the next couple of minutes. So here's Nikola. So I love this one. I mean, it's got a ton of volatility. I love their model. I want one of their trucks so badly. It looks awesome. So they've got EV models, they've got fuel cell models. They'll blow the doors off of just about anything out there. It's really, really cool. So they've just had a PR blitz over the last couple of days after earnings. So they got through earnings successfully, PR blitz. They're doing all the right things now. So what we did in the room was we said, hey, what price would you be okay picking up Nikola for? And I said, $20 sounds good to me. I'd be a willing buyer at $20. And so we're down here. And so what we did was we said, okay, I'm going to accept 31 cents, which means $31 per contract is going to come right into my account. So for every contract that I sell, $31 comes right into my account. And basically what it means is I'm paid for the pullback all the way down to here. So this pullback between 40 and 20. So in other words, normally if you want to buy something at $20 per share, you got to put your limit order down there, and then you have to genuflect, hope, pray, that the price comes down to there. Otherwise, you're left like a bride at the altar as the price runs away from you. So isn't there something that you can do to make money if the price is going to run away? Well, yeah, you sell puts. And if the price does come down to there and gets you assigned at that $20 per share, at least you got paid for that. You got paid for that differential for it. So selling puts into pullbacks works really well in today's market. Like here's one at GDX, which is the gold miners ETF. For a 25 September, if I'm willing to be a buyer on GDX at 37.5, which is right there, which is not far from the price, but I'm going to take $158 a contract of credit. That cash goes right into my account. I can use it for whatever I want to. Go out and buy a TV or something like that, or go and reinvest it into something else. It goes right into your account. You can do whatever you want to with it, right? So I'm being paid for any pullback that comes down here. And this to me is a price pivot, highly likely for the price to bounce off of here and go on the next leg of that run. So this is a way that you can get paid for buying something on a pullback. This is called a cash secured put. It's one of the simplest option plays out there, one of the most powerful, yet also one of the most dangerous if you don't know what the hell you're doing. So learn what you're doing before you do this. So as far as other option strategies that are working well for us, we're doing very well with a 0 days to expiration range bound trades. Pay attention. We'll be talking more about this in the next couple of weeks, because it's something that everybody seems to be talking about these days, is the 0 days to expiration trades. Lovely. Okay, number 5. We're right on time here. Simple one chart Digitex trading setup. So you guys remember, like a couple of weeks ago, we talked to you guys about Digitex was the commission-free futures exchange that's starting out with Bitcoin now, but eventually we'll get into things like the E-mini futures and NASDAQ futures and stuff like that. They'll be trading everything commission-free. Awesome, right? Great news for the retail trader, I think. So we've been part of this for the last 2 years. We were there 2 years ago when they first had the idea and no execution, and we've sort of suffered through it the last couple of years, but finally they've gotten to market, and it's great, man. It's really fun to trade. And we did a new set of modules on our Futures Masterclass to show how to use this and how to trade it. So I wanted to share with you guys a real simple way that you can, within a few minutes, get this thing working, right? First of all, what I would say, now this is the exchange here. This is the ladder interface. This is where you're going to click if you want to go long. This is where you're going to click if you want to go short. Don't just load up this account with some tokens and start trading it live though. Get the testnet interface, figure out what you're doing, understand what your strategy is. Don't fund somebody else's account just because you don't know what you're doing. So take your time and learn this, learn how to trade. This is your standard time and sales with this. But what I'm doing is I'm showing you guys just a real simple way to find edge on this chart. Just one single chart. Maybe next week what I'll do is I'll pull out the triple fractal 3-pane chart and show you a little bit more complex but more accurate way to do this. So think about this. Rule number 3 of fractal energy trading is that descending patterns like this eventually break to the upside. And then ascending patterns like this one will eventually break to the downside. So all you're doing is you're looking for the structure. You're looking for structure. You're putting trend lines on here. You're understanding what the current trend is, whatever time frame that you're comfortable with. You can start with 5. Maybe that's too fast. You can go to a 10-minute chart, whatever you want to do. Okay, so the first thing you have to do is understand where the trend is and how it changes. Now, this originally starts with a downtrend, right? We have lower highs, lower lows, lower highs, a higher low, lower high, and a lower low. And then things change, don't they? And they change right around where this yellow line is. This is the trend line. All of a sudden, descending patterns break to the upside. We go to a higher high, higher low, higher high, higher low, higher high. So at this point here, we want to start looking long, don't we? We want to start looking long. And what you can do is, if you don't read price action, if you don't understand how to read price action, that's okay. That's something that comes with time. It's simple, but at the same time, it does take a little bit of experience to understand where the price is doing. So what you can do is you can add some type of an oscillator. So this is a little known one. Not too many people know what a Fisher transform is, but this is from our short-term trading strategies class at Ready Set Crypto. I evaluated a lot of different oscillators to use as signals, right? Pullback signals. And the Fisher transform was actually one of the fastest and most responsive, because that's one of the problems with sticking indicators on here is they're generally a lot slower than the price action. They're they're delayed. It's a trailing indicator. You have to wait for some average to catch up to the price. So this is why I typically don't use them. But a Fisher transform is really fast. It's a really fast one. So what you're going to do is you're going to look for the first signal, the first actual pullback that's going to go down below -2 here. And that happens right here. And then it wigs up again. And so your long entry is right around in this area. And this is, that's a nice little yield that you can make on a trade like that. So it's one where you're not sitting there watching every tick. And it takes, in this case, it would have taken a couple of hours to actually fall through that. So you can actually keep raising your stop along the way. It's very pleasant to be able to do that, to lock in profits and raise a stop and then get on with life and do something else. So anyway, this is just a very simple way that you can do something like this. This Fisher transform comes with the standard indicators that comes there. And there's many other ones. There's the ultimate oscillator. There's the awesome oscillator. You can also use the good old RSI and maybe tighten it up a little bit, speed it up a little bit so it's more responsive. Lots of tools that you can use. Just, all you need to do to get an edge, though, is to commit to something. So again, rule number 3, descending patterns break to the upside, ascending patterns break to the downside. Don't forget that. That's part of my 4 rules of fractal energy trading. Once the price breaks the trend, you want to get the first pullback entry in that direction. What do I mean by that? What I mean is you don't want to be chasing this crap down here. So obviously this is a short signal. This is a short trend. You don't want to be chasing this stuff down here and down here and down here. This is way too long in the tooth. Get your entries way up there at the beginning of this. Obviously, there was some kind of uptrend that broke to the downside here. Find a way to get in on this one and not the ones down here. This is what all the other retail gets on board. So here's your first real signal. The first real signal is this one right there. The rest of the retail is chasing after this thing up here, and this is where trends go to die. So this is why I want you guys to get on to the first pullback entry. Set your stops and targets and let the price play out. Okay, so today's trade of the day is really just a little bit of little change to the cash secured put. If you missed out on this run from silver, and trust me, that's been waiting years on this one. I've been in silver forever, for literally the last 5 years, selling puts against it and accumulating silver, waiting for, is this ever going to happen? And finally it happens. But so a lot of people are chasing this up there and they're regretting this right now. So you never want to chase after it. You want it to come back to you. So how can you do that if you missed out on the silver run? Well, get paid to buy SLV on the pullback. Sell puts on this. This is the 25 September $20 put. So why buy it up here for 24? Why not get paid to buy it down here at 20? And we don't know if it's even going to come back down to there or not. But wouldn't it be nice to get paid for that regardless? I think so. Right? And we can find out later as to whether or not it's going to come down. So this is always the game that we play. So this trade has a 83% probability that the price is not going to come down to there. So there's a very high probability that you're going to win the trade without getting assigned. If you want a higher probability and get paid more, you can actually get much closer to that if you want to do something like at 22 or 23. So get paid $50 a contract to commit to buying silver at $20 a share. It's an 83% probability of expiring worthless. And you will need $2,000 a contract to absorb potential purchase. If you get assigned, you'll need $2,000 per contract. Hey, Darth Bark, how you doing? So if you want tomorrow's trade of the day, go here to readyset.trade/free. Join our trading chat room. Join our Discord, right? And I promise we won't spam you. We will not spam you. We will only send you interesting things if you do that. Okay, so one more thing before I take off. We're here. Doc is on deck in 2 weeks. I'm going to join the Mad Hedge Traders and Investors Summit on August 24th through 26th in 2 weeks. I will be sharing, so I'm working hard on this right now. I'm going to be sharing the 0 days to expiration strategy with y'all during that presentation. So look for the sign up link below, which is below this video. And hopefully it's the correct sign up link. And get signed up. It's free. It's free. Attendance is free. Okay. We are at the bottom of the hour. Unless there's any questions, let me know if there's any questions. I'll stick around here for a minute or so. Otherwise, you're welcome to take off. Thanks for attending. Thanks for hanging out with us here at Ready Set Live. We represent Ready Set Crypto and Ready Set Trade, and we are doing this 5 days a week for your pleasure. Thanks, everybody. Thanks, Dennis. Thanks, Vaude. And it looks like we are done. So thanks, everybody. You guys take care, and I'll see you in a week. Have a good summer. Adios, amigos.